Assalamualaikum everyone. We are looking again at the issue of risk-taking because as I have emphasized many times earlier, that we must resolve the issue of ownership risk-taking before we can go into risk-sharing or profit-loss sharing. So this has to be rectified because most of the Islamic banking products are based on sale with deferred payment, al-murabaha, for example. Because we are dealing with sale and not loan, so we will see that there is an exchange of goods for a price. And therefore we have to look at this issue of no pay, no gain, the principle of profit, or the principle of lawful profit, which is the fact that in order for us to earn money, we must also take the risk of loss, or the risk of losing money. So there is no such thing as risk avoiding in Islamic finance, where in risk avoiding, we will be making money without taking any risk. Of course, we can avoid risk. No, Islam will not oppose anyone who is avoiding risk. But if we avoid risk in our investment, then we must not expect any return, any profit from the position that we take, right? So only when we are able to take risk, then we are expected to be compensated with that risk-taking behavior. So in Islamic banking and finance, where we are dealing with sale, because sale is the basis of Islamic finance, because the Quran has prescribed al-bay' over riba. Al-bay' is sale, buy and sell, whereas riba is IOU, is lending and borrowing. So in lending and borrowing, there is no exchange of goods, for money, whereas in sale, we see the exchange of goods at a price. So we must be able to see that in sale or in al-bay', we must try to focus on one important factor, that is the ownership risk in sale, that must be observed, that must be assumed by the merchant, by the trader, or by the bank that is currently conducting sale in the respective business operation. So as I have said earlier, because of sale, because we are dealing with a sale transaction, then of course there are many risks associated with a sale transaction. What more if the sale is a sale with deferred payment? The risk-taking will go beyond ownership risk-taking, because in the credit stage, when the bank sells the asset on credit term, then the bank will face financial risk, which is credit market and operational risk, like what we see in conventional banking. But prior to the sale of the asset on credit term, we have the purchase of the asset from the supplier by the merchant, by the trader, by the bank. This is where the ownership risk will emerge, because the bank, as the owner of the asset, will hold ownership risk prior to the disposal of the asset on credit term. So ownership risk is real, but the issue here is that for a long time, the Sharia advisory have refused to acknowledge ownership risk in sale. And where we can see in Bay' al-Ina and in Tawarruk, this ownership risk have been compromised, it has been eliminated. And we are still here trying to grapple with the issue of defining ownership risk by Sharia advisory. And that is why I'm here to provide some kind of analysis. How can we move forward to handle this matter, and what will be the rectification plan in order to move forward. We can see here that when we are looking at al-bay' as a spot sale, so in a spot sale, the merchant will buy the asset from the supplier, which he intends to sell it or at a credit on a credit term to the customer, if this is a banking scenario. But in a simple, wholesale and retail sale scenario where there is no financing arrangement, it is essentially sale where payment is made on the spot, then we will see that the only risk or the major risk faced by the merchant or by the trader is ownership risk, because when the title is transferred from the owner to the trader, from the supplier to the trader assumes ownership risk taking. Now the asset belongs to the trader and he intends to sell it at the marketplace, but there is no guarantee he can sell at the price desired. So the expected price can be, let's say, $10 per unit, but there is no guarantee that the merchant can sell at $10 per unit because of the market forces. The price can go above 10 or below 10. If the price goes above 10, then the bank makes super normal profit. But if the price went below cost price, then the trader make a loss. So there is a profit and loss when we are dealing with ownership risk taking. So that is the basis of the legal maxim al-gharam bil-ghunni, that with profit come losses. Profit is accompanied with losses. The trader will expect some possibility of losses, in his business. That is what the Quran intends to convey when the Quran promote al-bay' over riba. And we know that in riba, of course there is no ownership risk in riba, because riba is mainly IOU. Riba is a loan. And there is no exchange of asset for money. It is just IOU, exchange of money for more money, and and therefore, so ownership risk taking is not relevant in the riba loan. What is seen in the riba loan is the risk avoiding principle. That is, the riba contract, will attract the lending party to put money at the bank, where the bank will guarantee, if it is a deposit product, the bank will guarantee deposit appreciation by virtue of the interest payment over the placement, right? So the depositor will enjoy profit without risking their deposit placement, because that contract of riba or the contract of deposit with interest have specified the terms, how the principal placement will become at maturity. So this is risk avoiding, because the depositor is guaranteed interest income and without any possible loss of the principal amount, right? So there is a taking of profit without risk that leads to deposit appreciation. And of course, when we talk about loan, the riba loan, the contract will specify that the loan will increase based on the interest charge on the loan, and at maturity, the bank will be collecting an amount of the loan plus the interest payment. So there is a loan appreciation, and this is this happened because of the fact that they have entered into a loan contract that specify the increment and the redemption, with interest. So that is risk avoiding, and therefore this is the two contrasting profit creation in riba in loan and in al-bay'. So in al-bay', profit creation take place by virtue of taking loss, whereas in riba there is no loss despite the profit created by way of the agreement, by way of the loan agreement, where the interest has been specified when both parties enter into the lending and borrowing contract. Okay guys, we can stop here. I'll see you again in the next video. Assalamualaikum warahmatullah.